Good afternoon, everybody. It is 12:59 in the afternoon. Um, oh, one moment. All right, let's see here. Okay, so we're gonna go over We're gonna go over the trades. We're gonna go over the market, but I want to kind of go over some theory as well here because we're gonna be touching on some more Gann related stuff. Again, if you're not familiar with William Delbert Gann, he is one of the fathers of technical analysis, and he is regarded as kind of one of the more quote eccentric individuals in trading. I don't know if he was eccentric. He was just really convicted about what he did and how he learned what he did. And so yeah, I'm going to go over some things. I encourage you to take some notes. So if you are watching this recording, take some notes because there's going to be some interesting stuff to go over and interesting things to look at. So first off, I want to get a brand new chart. And that is this one probably. Okay. Oh, what's going on with that? And let's go ahead and take a peek at Bitcoin. We're going to look at a daily chart. Oops, sorry, daily. Okay. So, one of the things, and maybe I'll wait, maybe I'll give this a couple minutes until more people show up because I would like some people here watching this live because it's kind of cool how this works. So one of the things that Gann is maybe not as well known for, everybody's probably heard his name before, and they're probably familiar with some tools like the Gann Square or the Gann Box, which is kind of a silly name, or the Gann Fan, which is also kind of a silly name. Now, I could totally be wrong, but I've never heard Gann reference anything called a Gann Fan. He never called anything like hello, my name is William Delbert Gann, and this is my Gann Fan. He never did that, and he never did call these things what they're called today. That's nomenclature that we've developed over time. What they essentially are, though, is they're tools that are used to apply his geometric principles to trading. So a Gann square is, first off, there's an issue with this because Gann did not use Fibonacci ratios. He used angle ratios, so which are very close to Fibonacci ratios, but TradingView, they put in these Fibonacci ratios, and I like to get rid of them because we don't need them like that. All right. The Gann square is and actually the default looks like this. The default Gann square looks like this. Looks like a really ugly 70s plaid suit. Although I think this is coming back into style for some reason, and so are some other weird, horrible colored furniture. And I often wondered when I used to work in a furniture store way back in high school, and when we would go deliver furniture and take the old furniture out, I always wondered what was it like to live in a period where the ugliest colored things became part of the normal style in a house and stuff. Like wallpaper's coming back. Why? Why is wallpaper coming back? Wallpaper is awful. It's ugly. It's blech. You can't paint over it. It's horrible to remove. I don't know why wallpaper's coming back. Well, we're living in a crazy time where wallpaper and ugly plaid suits have come back. And we're probably going to go back to shag carpet. Although the shag carpet these days, that'll probably be shag carpet that is like I don't know, like non-GMO, kid-friendly, biodegradable but still fireproof shag carpet. So it'll be like AstroTurf. Anyways, well, that was a rant. The Gann box tool looks like this, and it's not really a good representation of anything, because the Gann box is used to represent an area of a square. And what I mean by an area of a square, of Gann square, of time and price. So one of the things that TradingView doesn't do for you is they don't apply the angles. So you should apply the angles, and you should get rid of the colors as well. They're really not necessary. And then I get rid of all of the Fibonacci levels except the 50% zone, because that's the most important one, okay? And there we go. Oh, you know what? I missed one. And there we go. So that's what it should look like. That's exactly what we should see this look like. Right. And all the Gann box is an overlay to square an area of time and price. And we went over how to square time and price in a previous video, and we're not going to go through that again today, but I will just copy the square from the other chart. Well, that is not accurate at all. Do have to really be on the daily for this, I bet. Oh, that's not even Bitcoin. So this is the square in Bitcoin. This is the squaring of a range. So this was squaring a high to a low, or sorry, a low to a high, and this is the geometric pattern that we get. Now we can create a pattern that goes smaller, or we can reduce the square by half or a fourth or whatever we want. But either way, the angles will be accurate within that trading frame. So that's what we're looking at. Now, after you've applied the square, then you're dealing with angles, and the next part is, what are these dates and stuff. So Gann is well known for this activity here and this chart. Oh, you know what? My coffee's done. Hold on 1 second. Be right back. All right, I'm back. Sorry. What's hot? If any of you like coffee, then you know how important it is to have it. All right. Okay. So the other thing that Gann is well known for is, or not exactly well known for people who have not read his stuff, is that he has these dates and these day counts that are really, really fascinating. So first off, we'll go through these cycles. So the first day, and we go by calendar days. Okay, we go by calendar days, not trade days. And what's awesome about cryptocurrencies is that the market is always open. It's never closed. The market is always open. It's never closed. So we don't have to do any adding or subtracting or trying to figure out which date is the best, like we do in the futures markets, forex markets, or the equity markets. So we don't have to worry about that. The cycles of the inner year, this is what Gann called it. So there's a few of them. There's a 45-day cycle. So let's go ahead and plot these out. So you look for cycles to start at any significant swing high or swing low. So we'll just go from the swing high here and we take the day after that. And I'm just going to measure over to 45 days. Okay. And Gann said that in the 45-day cycle that this can reverse a trend to either a full trend reversal, or it can cause a blow off move, which is a move that ends a very fast move and it causes a counter trend move. Counter trend move meaning that it will eventually resume the trend. But it says moving from a low to a high or high to low in 45 days can also set up a 45-day move straight down or up. So what he's saying is that in a move where we've found a swing low here, so in this move we've had a swing low at 45 days. Why don't I put a horizontal or a vertical line there? So that blue line is 45 days from the high. And he's saying that this can create, after a corrective move, another 45-day move lower. All right. So, and then he called this his the death zone. And the death zone is really, really cool in Forex markets. It's very, very frequent. And the death zone is the 45 to 49 day cycle. So, when we talk about Gann's work and his use of numbers, he uses the number 7 a lot. 7 and 9 and series of 3s. Those are all extremely important, important numbers. And 7, especially in date counts of days, is probably the most important number. So things moving in 7-day periods or 7-week periods or 7-month periods or 7-year periods are very, very important to look out for. And probably one of the most important and reactive ones is the 49-day cycle. It's the 45-day cycle. I call it the 49-day cycle because it usually lasts 49 days. But 7 weeks, so 7 days times 7 weeks, 7 days in a week times 7 weeks, 2 number 7s times that. 7 times 7 is 49. So we're looking for 49 is also in that count. So he said that is the death zone. That is where many trends will end or have a swift counter trend, and you'll see swift market moves. So this was at 45 days. Usually when I see something at 45 days, I think, okay, I've got 4 more days really to look out for this, because 49 days later was a reaction to that swing low. Now, this is rare because you don't often get the swing low to appear right on the date. You got to use some common sense here, because there isn't the dates. Gann could pick out the exact date, although I'm sure he could maybe do that if he was alive today. But back then, I mean, let's be honest, there wasn't as much movement back then. There was, but I mean, it's think of it to scale. So we have that appear right on this date. That is not very often that you see that happen. So if you take anything away from this, the whole video, if you take anything away from any of it, if you're going to remember anything, remember the 49-day cycle. That is a very, very important cycle that you start after any important swing high or swing low. Okay? So 49 days. Here's we have that low. And you got to give it like sometimes you got to give it like a week. You could get this change happen a week before the 49-day cycle, or it could be 7 days after the 49-day cycle. There's obviously like you got to give it a little time here. So, just think of that. Don't be so absolute. There's really nothing absolute in the market. The only thing that is an absolute in the market is that I think is that a parabolic move is always met with an equally violent correction, up or down. So 45 to 49 day cycle, he called that the death zone. And then after that, we get into the 90-day cycle. Okay. So again, I start from any significant swing high or low, and I look for 90 days. And the 90-day period he said, is the most powerful division of a 1-year cycle. So when we're talking about a year, we're talking about literally a 1-year cycle. Most powerful division of the 1-year cycle. It's a high probability of support or resistance being found at that level. And it can start 90 days up or down. So we've been 90 days down. It can generally start a counter trend move or reverse the trend. And then 90 days from any significant high or low must be watched for trend changes. And then he also wrote, he was kind of sneaky about this because he didn't like write it right in there when he was describing it. It was kind of like almost like a little footnote. But then he also wrote, against extreme momentum and or pitch, the 90-day cycle can extend to 99 days. And so this was I mean, I don't know about you, but this move here from the all-time high to down here, that's a pretty extreme move. That's a very fast move. When you wipe out, 64 to 70% of the value of something in a month to 2 month period, that is a very swift move. So we move this over to 99 days. Again, we're not looking at the exact time. We're looking for an area around it. And what do we see have happened? Yes. Do we see important yearly highs or lows being found around here? Well, that has to be determined, but we did find a swing low, yes, in that 99-day period. Okay? Then moving from there, we have the 120-day cycle. Okay? So we go over to 120. Again, these are all calendar days, and that really doesn't matter for Gann's work. Cryptocurrencies, rather. It's because they're open every day. So 120-day cycle usually occurs with the trend. Should be watched as a low or a high and a counter trend. Okay. And especially true if there was a lower high found at the 90. Some instruments have 120 and 100-day cycles. I didn't see a correlative action here. There was no swing high or low really to be found, maybe just on the short term, but I didn't really see a 120-day cycle play out at all, so I'm not going to put one there. After that, we have the 135-day cycle. Where are you at? 135-day cycle. And he said this can be the last high, or more typically a lower high, which ends a topping pattern. If a high was found at 90 days, then the 135 degrees would also be 45. Okay, he's just talking about the angular relationship. Always watch for a change in the trend. Fast moves can go from a lower low to a lower, can go lower to a lower low, or high to a higher high. And so we got to look. The most important thing that we could take away from that is in the 135-day cycle was that it can be a topping pattern or a bottoming pattern. So is this a topping pattern? Well, hell yeah, because 3 days later there's a topping pattern. All right. Is this cool to anybody? Because this stuff's wild. When I first started applying this stuff and going back in time, then started using it live all the time. I mean, I'm always like shocked by the power of these day counts. It's okay if you don't think it's cool. This isn't a flashy indicator, this is actual analyst work. I was talking to the Forex Lens folks this morning because we meet at 7:30, and I was talking about that there's a difference between somebody who's a analyst and somebody who's a trader, because and I don't remember what book it's in, but I just read it actually. I was rereading something. Dang it! I think it was an author on Elliott Wave. But he said that analysts are masters of observation. Traders are masters of self. And so to be a good trader, you have to be a master analyst, but then also you have to be a master of self. Okay? And so that is what he said. And there certainly are plenty of analysts out there. There are plenty of traders out there, but there's not a lot of people who are successful traders and analysts. It's a hard thing for folks to do. It's not easy. Anyways, this is analyst work. So the 135-day cycle, yes, that does show a lot of use in there. After that this is kind of an enigma in his, but the 144-day cycle is an odd one. I did not see a thing in here for it. He said that it can terminate moves and it's generally misapplied by students of Gann. I don't know what the heck that means. Not sure. Then we have the 180-day cycle. It is the next most powerful cycle after 90, viewed the same as a 90-degree cycle. So again, we look for 190 days. What do we see at 190 days? Well, by golly, kind of a big deal, I would say. A new yearly low was formed. Yes, there was. That is a monstrously huge deal. So the 180-day cycle, just like the 90, it states that there's a high probability of support or resistance being found during that time, and that 90 days up or down, blah, blah, blah. In the 90 days, it says 90 days up or down can usually start a counter trend movement, or 90 days from a significant high can continue for 90 days to create a new low. So anyways, we have 90 days, 100 what am I saying? Yeah. 190-day cycle. Oh, I missaid that. It's the 180 to 190 because if it's off of extreme pitch, it can extend to 190 days. So it's 180, 190-day cycle. Okay? And there definitely was a zone there of importance. Then we look at the 144-day cycle. Where are you at? Let me make this just a little smaller. You don't need that there. No, not 140. 216-day cycle. 216-day cycle, not a lot over there, just said that it should be monitored. So then we go to 225, and 225-day cycle said that it's similar to the 135-day, which can be a high and cause a fast move in the opposite direction. So we really did see that happen here. That's in the 225-day cycle. Then moving forward, we have only a few more left. Off the 225-day cycle, we have the 240. It's like the 120, but because the 120 didn't show anything, we shouldn't expect the 240. We have the 270-day cycle. This is the next most important one after the 180. So this is the next most important. It can start a 90-day move which ends a yearly cycle. A very high probability that a 45 or 90-day cycle will end the end of the year, the 360 to the 365-day cycle. So when that day comes, and that is in September, it's on September 14th, which is right around the time when Bitcoin usually starts its monstrous bullish drive for the fall before it sputters out in mid to, well, between late November and February is when Bitcoin kind of decides to poop. So we've got that, and after that, very last cycle that we have is the 315-day cycle. And that ends on the 29th of October. And what he says is that's 45 days, less than a 1 year, and can start a fast blow off move. Okay? Now we've seen the same kind of thing happen last year. Okay, if we were to go back 45 days from the all-time high. Oops. All right. That's what we would have seen. Definitely looking at some type of a short zone happening there. So, I mean, we could plot these back and see what happened and see how much this stuff panned out. So, again, these are the day counts. Then 1 year, we move it over to 365 days. So that's the 1 year cycle. We won't have to put that out there because we know where that is. Well, hell. And that's our 1 year cycle. All right. December 17th. The anniversary high. And let's see. So now we have, let me see here. Let's see. Now we're going to have these dates. Because Gann also had specific calendar dates that he talked about as areas of importance. And the calendar dates, they seem random, but they're really not, because they start with the seasons, basically. So, they start with December 22nd, and if we remember looking at the, I don't have it pulled up. I don't have this Optimus pulled up, but there's a square of 9, and in the square of 9, as it goes around, we see that there's cardinal periods and then diagonal periods, and yeah, so there's dates on his square of 9 that make sense, but if you've never seen it, then you're probably wondering, okay, where the heck do these dates come from? But we'll soon see what they're all about. So we've seen this, and now we're going to look at these dates. So one of the dates that he discussed is the December 22nd. So December 22nd is when we usually see that is a start period for a lot of Gann stuff. I mean, that's when winter starts. That's the first day of winter, actually. And what Gann wrote is that if December has a swing low, we usually rise into January. That really didn't apply on that date, but we'll just keep an eye on that. Then the next date after that was February 5th, which was an interesting zone because February 5th and the 45-day cycle from the all-time high both fell on top of one another. Okay, I'll put them next to each other. So whenever you see this happen, when you plot out Gann's dates, and this is something that you don't even really have to, you have to do this once a year. You find whatever you're trading, you find a significant swing high or low, you just plot out these day cycles, these day counts, and then you plot out the dates. And you should pay very, very close attention to any of the day counts that also coincide with a particular date of Gann's calendar date. Okay, so February 5th, and then March 21st was the next one. That's 90 days from December. He called it a spring rally or culmination. He was talking about commodities in that book. So the spring rally is probably moot. We don't have enough data yet to determine if that's accurate for cryptocurrency. So the 21st, I don't know. Really can't say much about that one. May 6th, he said to watch for important changes. Right there. Now that is a nice confluent zone that we noticed if we were in the Forex Lens trading room. When we would talk about cryptocurrencies, we talked about this zone quite a bit. So we see that topping zone here. We see these two areas where, remember, this is the 120-day cycle. Wait, was it 120 or 135? 120. Yep. So have that top there. Then we had June 22nd. That was not very long ago. June 22nd. Right around this low here. Very important zone. So you can see, hopefully, how often there are these swings that happen around these dates, especially if they correlate to the calendar days that Gann talked about. And then July 7th. Now, July 7th, he said that advances or declines often culminate around that zone, around that time period, and watch for trend changes. And then after that, we have August 8th, which is coming up. That's the next date. Very important for a change in trend, and watch for tops and bottoms. Really, we've been in this bottom zone for quite a while. Again, that's why when we say, like, okay, watch for the bottoms, you got to divide your instrument into quarters, where you have a top quarter, a bottom quarter, and then you have two middle quarters, an upper middle and a lower middle quarter. And if you think of a chart like that, it's very easy to think, okay, I know if I'm in a bearish area or if I'm in a bullish area, if I'm in a top heavy area, or if I'm in a bottom heavy area. So we're definitely within the value zone of a bottom area, so that makes sense. So basically what we're saying is that we've got these areas here indicating some changes in direction. And then we have September 23rd and November 8th. And, finally, we have December 22nd, which is not very far off that. So the day counts for Bitcoin and the calendar dates are they're really within a week of one another for the most part. A lot of them are in the same week, but it's a pretty cool zone to be looking at and to be trading. Now, when we look at some others, there's some other ones that he kind of pointed out that we really don't need to put on here, but he mentioned that January 2nd to the 7th. I'll just kind of highlight that zone with a, whatchamacallit here. January 2nd to July 7th. Oh, sorry. January 2nd to January 7th. January 2nd to January 7th. He said that the highs and lows of the year can typically be found at that area. And you could not find a more textbook. I mean, maybe you could, but I think 2018's Bitcoin chart is probably one of the best Gann date and day count charts that I've seen in a while, because so many of these things line up so very well together. I'm telling you that is not always that kind. Well, actually, it is pretty common, but this one's just really, really easy to work with because, I don't know, it just is. So that high was found within that zone on the 6th, the yearly high. When I'm talking about the yearly high, I'm not talking about over here because that was in 2017, but the high of the calendar year is in here because he's talking about the calendar year right here. So then we have Um, sorry, I had a little pause there. So then we have the next one he talked about was July 15th to July 21st. Where are we at? July 15th to July 21st. And he said that the lows of the year can be found around that zone. And that is definitely what we have going on here. We are definitely within those low zones. I mean, the first day of that, the 27th or the 15th of July, was not very far away from that all-time low. So, okay, yeah, we got that there. Then there really wasn't anything else that he really mentioned as far as the actual day counts. So that's what we've got going on here. There's a whole lot of different things to trade within these zones, and it's very fun to see how these things trade and how they play out, because we get a heads up of what's happening. So we know in Bitcoin that as prices get into the fall, so as they're approaching August, September, October, November, generally these are very strong upward moving periods. Okay, we usually see that happen before we see a sell-off. So yes, I don't think I missed any of those days and those dates. Oh, okay. And so how does this apply to trading your price action? Those dates and those lines we would want to keep on our chart. Because, let me copy this. We would put them on our screen when we have our square. And this will all clear up once I get rid of, or I hide actually. Bear with me a minute. Okay. So when we're looking at Bitcoin's chart, we're looking at this market geometry. This is a square of 52. And very easily, this is a square 52 is you place it on an important higher low. Not only the first day of the week or the month, that goes on an important higher low. All right. And we count it by calendar days, not trade days. And we find the mean or the average of the extreme high or low. And basically we're squaring a low or a high here. And it lasts for 7 days, 7 weeks. But the total square of 52 is 2,704 hours, or 112. Well, that's halfway through. So there's 52 weeks in the year. So this is a division of an entire yearly cycle. And that matches up well with the actual counts. So when we're trading within this market geometry, we are looking for the behavior of price at these angles, and then especially how do they react as we get close to these time zones. Actually, I like to look at a 4-hour chart. So we can see that Bitcoin, as it was traveling down, really responded well to this downtrending Gann angle. And then as we got to a bottoming formation, we got to this date. We saw price come to this confluent zone. That was telling us that there was a strong indication of some supportive price action, because we have a confluent zone of two unrelated pieces of analysis. That's the Gann day counts and the Gann angles. So they share a name, but they have different operations in the analysis. And so whenever those things happen, we want to pay attention to how to supportive, or actually don't even think of support or rejection. Just we want to see prices respond away from the previous activity. Okay, so that's what we have going on there, and we see price respecting the angles again, trading, blah blah blah, moving. We see that top was found around here. It's trading up. Came into here. We found that market, that swing high up here. Really, when you see it stop and fail to break an angle, I mean, you can trade pretty confidently to the reverse of it. And the question may be like, well, how do you trade these angles? The angles are not actually, don't think of them as trend lines. They're kind of like trend lines, but they're indicators of momentum. And so these are levels of momentum. That's what you want to think about. And Gann had a rule called the rule of angles that stated when price breaks an angle, it will move to test the next angle. So when price broke this angle, where did it move? Moved down to test this angle here. It was trading around between the two, fell down, broke this angle, retested and failed, and moved down to test this angle here, and so forth. You can see that prices are very, very frequently finding strong rejection zones and continuance zones based off these angles. Okay. This was kind of a funky trading operation right in there, but yeah, we can definitely see. Yeah, it's like right on the 15th we started to see a pretty swift rise. And yeah, so as we're looking at the chart now with Bitcoin, this is not actually, on this chart, this is not actually a very good sign, because we are currently trading below this angle. I believe that is the 45-degree angle. Yeah, that's an angle we don't want to be below. We've been above it, and now we're looking like we want to break down below it. So if Bitcoin breaks and holds below on a daily chart, if we can't stay above this zone, we probably move to test the next angle, which is all the way down here. We would test that $6,400 value area. Okay, that is a very, very real probability. We'll see, though. I mean, when we were discussing the actions from the other day, actually it was yesterday when we were discussing the price action and looking at possible trading behaviors and directions, we were looking specifically at the excuse me, at the 7K area being tested, and so that all kind of plays into that other chart. But again, we're coming up on the 8th. That is telling us that we have a lot of trend change happening between these two time periods here. So certainly the selling on that date, followed by hopefully we get some consolidation into the 8th, where we just slide across and we stay above this 45. That'll be a pretty bullish signal moving forward. So yeah, the next thing that you could do. So after we've constructed all these days and we're looking forward in time, is that also I want to point out that in the yearly cycle, the low of the year, especially that new low, was found right within that 50%, halfway through this entire 52-week cycles, where we found a new low for the year. And so if you remember me talking about the mirrored foldback pattern, that's really what it looks like we're having form here, okay? Because you can tell just by looking at this price action here how similar this price action is. I mean, it's the price action is pretty similar. The price zones are pretty similar, but more importantly is the kind of the bar pattern itself. Okay, so that is the activity that we're kind of looking at, the pattern we're kind of looking at forming over the next few weeks or so, into the end of August or so for this month. So we can see that the swings have been pretty accurate so far. So really from this zone we could even look at this moving a little lower before having a rise and then another swing low found, and we're not looking to repeat the exact price levels, although that could happen. We're not trying to do an exact mirror, but we're looking for just the highs and the lows in a mirrored foldback pattern. We're looking for the same kind of waves, so to speak. Okay, so that is really what's going on. And if that plays out, then we should see, I don't think we'd see a big throwdown in price like this again, but we could. We should just see it continue to rise. So yeah, this is a pretty cool thing that we're looking at. Bitcoin, I remember there was a blog from one of the, I think it was from the CEO of the Optima trading software, Optima by Market Analyst, and he said that Bitcoin was the perfect technical market. And in a lot of ways, I think that that's really correct, because the market geometry in Bitcoin is respected very, very well, and you can trade off of it very effectively. And so, yeah. Any questions? Any questions? It's fine if there's no questions, or if you do have questions, that's fine too. Real quick, as we're looking at our markets, we're seeing some consolidation in that 7,500 value area. Let's do a quick rundown there. All right. So we're just hanging around. If you remember yesterday when I was drawing that, we could, kind of come down to that 7,000 value area before moving sideways and then rallying higher. But so far, if we look at the hourly price action, we look at the price action from the 31st all the way into yesterday and today. We re-entered this channel, and we have stayed above it. In fact, we're to make this a linear regression channel. And oops. Okay, no, don't need to look at that one then. Just a basic channel. So far, we are staying above that. This is still operating then as a bullish flag. And so the bullish flag buy zones, haven't changed. The trade signals that we were putting out yesterday are for Bitcoin to get in on it at 83.33. I think that is still the valid option. However, by Monday or so, if we're not into another rally higher, then we may be experiencing a new buy zone on Monday. But certainly be aware of the lower prices that can continue here to that 7,000 value area. If we do break lower, I don't think we're going to create any more yearly lows. This zone here, this inner middle harmonic at 6,300, that's our strong support zone here. So be careful of that. I mean, we could really be forming a head and shoulders here on a daily chart. That could certainly be what we have setting up here. So we're just stair-stepping higher in our crypto market, and we're going to accelerate with the participants and the money coming in. So just be aware of that. Look out for that. And yeah, I mean, sometimes the crypto market, just like it is now, is just kind of dull and boring, and there's just sometimes not a lot to write home about. But yeah. Anyways, I hope you found this information useful. I encourage you to take notes. If you're watching the recording, write down those dates I was talking about. And nice thing about a recording is you can pause it, rewind it, and are there other cryptos that are textbook to all these patterns? Oh yeah, we've got some time left. We could look at, well, really anything should have this. Let's do something that's not a major pair. Let's look at Cardano. Cardano, do this over here. Where are you at? So Cardano, here's its all-time high. If we just kind of go down the list here of those zones, we can plot them out very quickly. Here's the all-time high. Plot this out. So the first time period is 45 days. Actually, I'll just give myself a bunch of those. 45 days. Or the 49. So 45 days. And then we go to 90 days. And then we have, oh boy, this is why I never rely on my memory. Even though I've taught this stuff for a long time, I still can't commit it all to memory. It's my ADD. I do have ADD, actually. My wife's a psychologist. Actually, she just got promoted to, she's the clinical director now at her place. She's fancy schmancy. It's actually really hard because I used to work in healthcare, and now I work from home all by myself, which I love. But I get cabin fever. I'm a really social person, so I like to go out and do stuff. But my wife, she's a therapist. Sometimes the last thing she wants to do when she comes home is to go out and do stuff. So in a way, it's cool because my wife will actually encourage me to go out and have a good time. Because she says I get moody if I stay in the house too long. Oh, well. So the 90-degree day cycle. Then we have the 120. Then the 135. How am I doing that? I had these pulled up. Then the 144, which we didn't do. The 180 to 190. There's 180 to 190. Oop. Yeah, within that whole range, we haven't really changed much there. So, though, I mean, this is Cardano. We do see the same things going on here. We do see very strong areas being met by these dates. And then we could actually, we'll put the Gann dates themselves on here real quick. So we have December 22nd, that was over here, back there, and then February 5th. There was a swing low found there. Then March 21st. A minor swing high. Probably more thinking about a bottom there, though. Oh, you know what? Let me... It's actually fun if sometimes they're not all on top of each other because you get multiple swing drives. And then we have May 6th. Oh, exact dates. I'll just put them next to each other. Then we have June 22nd. Is that June 22nd? And then August 8th is coming up over here. Okay. So, yeah, very, very nice, strong. Yeah, I like this. This is actually, you see a surprising amount of the peaks and troughs and important volume nodes being found on these time periods. Yeah. Pemcore, how do you? Can I ask your opinion on this stuff? Okay, never mind. You just gave it. It's amazing. It is amazing. It is nuts. And I've been doing this for a long time. And Gann's market geometry. Oh, here's the other thing that you could do, because TradingView, even though it doesn't have a full astrological suite of financial astrology, and it doesn't have like a full Gann suite either, or a full Fibonacci suite, it still has stuff that we can use, because one of the most important components in financial astrology, and for those of you who have not heard me talk about this, don't discount it, because I think you do that to your peril. You shouldn't discount something that sounds ridiculous until you actually learn about it. Although I will admit that the word financial astrology really is they need to change the name. Because when I think of financial astrology, I think of bad early 2000s, late 90s Madame Cleo commercials. I think of tarot cards, chicken bones, magic 8 balls, and weird people at county fairs. That is what I think of when I hear financial astrology. But what financial astrology really is it's mathematical psychology based on the science of astronomy. Okay, that's what it is. But they shouldn't call it astrology, because we're not concerned in financial astrology. This has nothing to do with, how do you say, oh, this coworker of mine, she's a Libra, but I'm a Sagittarius. How do I fall in love with her? It has nothing to do with that. It has nothing to do with your birth chart or your horoscope. The astrological symbols and names are just the geometric position of something around our solar system. That's all it is. Like Taurus, I believe is, or off the top of my head, it's like, well, damn it, I don't have that software pulled up, but that's okay. But one of the things in financial astrology that you learn is that, because financial astrology is used solely for the purposes of forecasting and identifying future dates of importance and not trying to tell the future. It's the only form of financial analysis that is entirely forward-looking. It's a forward form of analysis. It's not a lagging form. Whereas, there's three parts to financial analysis. You have fundamental analysis, technical analysis, and financial astrology. Those are the three branches of financial analysis. And fundamental analysis is entirely a lagging form of analysis, and then technical analysis is a combination of lagging and leading form of analysis, but it's mostly lagging form of analysis. And then financial astrology is entirely concerned with the human behavior, behavioral trading psychology, and forward or leading forms of analysis. But one of the things you learn is moon phases. And some of you have been here before. If you probably get sick of this because I show this quite a bit, but moon phases are an important part of the markets. In fact, they're probably the most important in commodities markets. I live in a very rural area in South Dakota. We have a lot of farmers around here, cattle, beans, corn, hogs, And those guys who do some of their own trading or they do some of their own hedging, they will swear by moon phases. It's weird to hear, first time to hear it, a big burly dude down at the stockyards, and if they're there talking about the moon phases, it's a little weird. You don't expect that. Anyways, moon phases operate like this. So there's full moons and new moons. And new moons mean that there's no moon in the sky. It's just pitch black out. A full moon means, that there's a big full moon. What you typically find in markets is that they're sensitive to one moon phase during a bull market, and then one phase during a bear market. So full moons are indicative of market lows in cryptocurrencies, and then new moons are indicative of market highs. So when we look at a bear market, so a bear trend, what you don't want to do is you don't want to buy during a new moon in a bear trend. And so the new moons are here. Wait, nope. I know I'm having a brain fart because I know these. Yeah. Sorry. So, where am I at? Let me get rid of the drawing tools. That's what I'm looking to do. You know what? I'll do it with Bitcoin. It's much easier to see. And then I will leave you all alone. Bitcoin. Let's just hide all the drawings. Okay, so Bitcoin likes full moons in bull phases, and it dislikes full moons in bear phases, and it likes new moons in bear phases. So basically what I'm saying is, oh, thank you, Michael. Appreciate it. Yeah, there's just not a lot of good technical analysis stuff out there. And half the reason I ever got into this is because I could not find good shit. Sorry, pardon my French. I could not find really anything more than somebody trying to tell you that moving averages were a good idea, and that the MACD was a good idea, and what else do people usually talk about? The DMI. Just some really crap applications of stuff. Moving averages can be amazing. They're just not meant to use to initiate trades. So here's a full moon. And that's the dark moons are the full moons. So full moons tell us that we usually have a high probability of rising prices during a full moon. So if we know we're in a bull move, that means that we really only want to buy during a full moon. So we have the open of a full moon here that equaled higher prices. This full moon, not so much. That's pretty common though. You can have at most you may have a flat market during a full moon if you don't get a rising market. But we have a full moon, open and closed with higher prices. Full moon, open and closed, higher prices. Full moon, lower prices. Tell you if you're in a bear phase, I mean if you're in a bull market and you had a down move, you'll more than likely see a rise during a new moon. But and we had rising prices. So I mean, this looks a little ridiculous, right? This certainly cannot be this frequent, but it is. And essentially, what you would do is you would, if you're trading like on Kraken and you want to short, then what you would do is, or even if you're not, you would buy you would have a bullish bias and trade going long only during a full moon, and then you would just remain flat during a new moon. You would either sell or take a break or short something else or find something else to trade, but you certainly wouldn't want to buy during a new moon. Can you? Sure, but you're going to see that full moons often have a better higher trading bias. And then if we look at, oh yeah, plotted those lines because sorry. You can look yourself. So then we have new moons, which means there's no moon out there, and that's the white circles. Consequently, the market high was near this new moon, and this is also the and when I'm saying futures markets and commodity markets are important, the CME decided that a brand new moon in the last new moon of the year was going to be the day that they were going to open up the futures market for Bitcoin, and that's when we started to see prices just collapse. And so that's the new moon, and we start to get in a bear phase. So when we start to notice that there's not a lot of buying pressure, we actually see significant selling pressure during these full moons. We know, be on the lookout. So lower prices selling during a new moon, lower prices. We actually did get some higher prices, flat prices in this new moon, lower prices in this new moon, and so forth. All right. And now what we're getting is we're kind of getting the inverse trade there, because we had a new moon phase just recently, and that traded higher. And now we're in a full moon, and full moon means that we're more than likely going to get another rise in prices, back-to-back 2 weeks of, or two moon phases back-to-back of higher prices. So the lows could be showing up pretty soon here in Bitcoin if we're in a truly new bear trend, or bull trend rather. All right, so we have those moon phases on top of the day counts and such. So we can look for correlation of these moon phases, and you know what, make it a little less. So we look at these dates and we see if there's any, like we have a full moon here near these two time cycles. That's a pretty good idea. Something's going to happen. Same here. Well, not really. It's a little removed, but actually, surprisingly, there's not a lot of those here on Cardano, except this Gann period here, followed by this moon, even though it's the wrong one. Think of lunar phenomena as an additional trigger. I mean, don't trade based solely off of a moon phase, but certainly if there is other forms of analysis that are indicating an importance, like a Gann date or a geometrical angle at that time, then definitely, pay attention to it. But yeah, moon phases are an awesome tool. And I'd encourage you, whatever market you trade or whatever currency you trade, not everything trades moon phases the same way. Like, for example, the FTSE 100, the British market, that is more bullish during a new moon than it is a full moon. And I think the Bank of England actually, like in the 80s, did a study where if they would have, that it outperformed the buy and hold by 40% over a 20-year period, something like that. 40% better gains, higher gains than a buy and hold strategy. So you get a lot of drawdowns if you trade moon phases solo, but it's a pretty cool way to look at the markets. It's a pretty safe way to help plot out your trading bias, and it's just another tool in your toolbox. So again, a little bit over my time here. Apologize for that. Thank you for watching, and again, please like and subscribe. And we're here every afternoon from Monday through Friday at 1 p.m. Central Standard Time, going over a whole crap ton of crypto analysis and trades. I did not put any trade ideas out today because not seeing a lot of zones yet, but we maybe will tomorrow. Tomorrow will certainly be going over the weekend stuff as well. Again, guys, have a great trade day. Hope your week's been good so far. Forex Lens, folks, if I don't see you tomorrow morning, I'll talk with you whenever I see you again. So see you tomorrow morning at 7:30 for Forex, and then again tomorrow afternoon at 1 o'clock. Have a great day. Bye-bye.